Sure. Thank you so much for hosting this conversation. It's super exciting to have this group of people together. I guess my background in crypto, if you really want to go way, way back, when I was working on the sharing economy movement with an author named Rachel Botsman, it was the early days of the, I guess, blockchain and Bitcoin explosion in the 2010s, 2015s. So I was very cognizant of all of that. And there were some early experiments of sharing economy on the blockchain, but it really predated the technology's capability to kind of execute on that in a way that was liquid enough for participants. I then spent 5 years working at Reinventure, whose one of the first investments was Coinbase in 2015. And that, again, was the next layer of explosion of the fintech and blockchain cryptocurrency ecosystem. I'm now principal at Startmate, and this is more of a personal interest and passion in my nights and weekends than it is part of my day job, but definitely looking out for the next wave of Web3 founders and creators across APAC.
Yeah, awesome. Yeah, I think a lot of similarities there. Abby, do you want to go next?
Thanks, Dan, and good to be a part of this panel. Really looking forward to it. So I'm an analyst at Folklore Ventures, which is an early stage VC fund based here in Sydney. We've sort of looked at data networks and decentralization for a while, and backed a company called Crypto Tax Calculator recently, and looking to really back companies that are sort of doing the infrastructure side of decentralization, and so like super interested in that. Personally been in crypto for about 5 or 6 years, and also I'm the co-founder of DAO Under, which is an APAC-based Web3 community. We'll be hosting ETH Down Under towards the end of the year, but Sally, Dan, and soon Lauren, you'll be added soon. But yeah, love to have a chat.
Awesome, thank you. Sally, do you want to go next, and I'll finish off?
Sure, thanks for having me. I'm Sally. I'm an investment associate at King River. We have a dedicated Web3 fund, so we can invest across everything, including equity, private sale tokens, public tokens, land sales, NFTs, whatever you call it. I think two of the most prominent portfolio companies we have that people would know would be Immutable, which is the NFT gaming platform, and also Consensus, which is the owner of MetaMask. And we also have some other crypto investments coming soon. So I'm excited about that. Personally, I first got into crypto. It's actually really interesting, really funny. So I've always been aware of it, but I first got into crypto by investing in crypto as I used to work in TradFi, where you weren't allowed to invest in stocks. So we all got really interested in this crypto space that was unregulated and super interesting. So that's how I dived in.
Yeah, awesome. Yeah, I think some similarities there with investing, obviously losing a lot of money the first time around, but second time around, you learn to stay in the space. And I got a lot deeper working in a crypto trading company. But after feeling a bit of the sort of deep technology, I just had to go full time on my own to research the content, and I published that on Meta Collab Substack. And now I'm keen to sort of extend that with DAO contributions, where I got involved with Wildfire DAO recently, which was announced on Twitter. So a lot of fun stuff happening there, potentially going to ETH Amsterdam. So that's my journey, and I have had some background in Web2 angel investing. So I really wanted to talk to everyone here, because we've all known each other to some extent from different groups. So it would be really cool to talk about the challenges and the new paradigm of Web3 investing, and maybe that will shed some insights for founders and teams that are migrating into the space, looking to grow a company, start a company, and grow a company alongside VCs. So yeah, so I think maybe to capture the arc of investment, there's like a framework of source, select, and secure. And a friend of mine from Fab says adds on the support aspect of it, which really comes in the Web3 space. So let's talk about the initial one, where how do you sort of evaluate projects and select these investments when you think about the previous frameworks in Web2 and now the new paradigm in Web3? Do you want to start off, Abby?
Yeah, it's a good question. And I think I think a lot of the same frameworks still persist. I think, a lot of these Web3 projects are still super early on in the journey. And so, the founders' determination really matters, and their drive and their vision really matters. I mean, I think to some respect, decentralization is pretty cool and is an important part of the space. But ultimately, it's sort of like in the early days, it's sort of the founder's vision and drive that really can take a project to the moon. And I think that's like ultimate. And another thing I think is super important to think about is more so on like the product and distribution side. And what I mean there is more so the alignment of incentives that's sort of created through the use of tokens can sort of change user behavior with the product. It can cause them to churn more, or it can cause them to stay more sticky. And so like understanding that part of these projects is super, super important. And yeah, like thinking even more deeply, thinking about whether a token is actually necessary for that given product or project is super important. But that's sort of like the high level framework that I think about in terms of Web3 stuff. I mean, the other things like competition and market always matter, but I think those are sort of like the unique things that people sometimes forget about when evaluating projects. Yeah,
interesting. Yeah, definitely the token aspect, whether it should, not every product needs a token in the space. But I guess that sort of overlaps with their marketing sometimes, but doesn't do well for the investors. Sally, what do you think about it?
Yeah, so given the incredible amount of innovation, like a new project is literally popping up every probably few minutes, I reckon, we really think that you need to take a bespoke approach to every single investment that you take. I think there's a few different factors here. So firstly, it depends on the focus area. So looking at a metaverse project is very different from a DeFi protocol. And within a DeFi protocol, there's so many nuances. You might be looking at AMM, the algo stable coin, or you're looking at a digital wallet. All have really different metrics or things that we really care about. So that's one aspect. Then there's also a stage of growth. We think about a product, really early stage company really differently from what we think about Consensus, for example, which is a pretty established player in the Ethereum blockchain. And also I think another thing to think about is the structure. So, is there going to be tokens, as you mentioned earlier? That's something to think about. Is it a DAO structure? Is it PTY LTD? How do we think about this? And also we move really quickly through our investment process, but there's always a few things that you kind of look at for every single type of investment. So you always dive into the white paper really deeply. As a VC, we love to meet with the core contributors or the founding team or any key partners and users of the program. We also really want to understand what that long-term vision is beyond the 1 year roadmap, which is sometimes what some people have, in the beginning, like, where do you want to be? Why are you building this? And then also we make sure we test the product. So that's also the most fun part for me personally. I love, diving in, whether it's trying a blockchain game or if it's, putting out some of my tokens out to earn some yield. I think that's really interesting. And then obviously when it comes to crypto, there are other things that we deep dive into. It might be a tokenomics, might be a protocol architecture. Why are they built on a layer 2 ZK rollup, or governance, strength of community? So there's a lot of things that we look at on top of a traditional Web2 investment. But I think, as Abby said, the same due diligence rigor or like the same overarching framework is there.
Yeah, interesting. Yeah, exactly. Definitely there's a lot more involved in it, and the team. Yeah, especially it's. I think it's pretty common to agree that the team is important in Web2, but it's even more so the case, I think, in Web3, because good teams can make a lot of money upfront, and the question is like, is this a pump and dump, or what's the intention of the founder in the long run? So yeah, interesting aspect. How about you, Lauren?
I think it's worth calling out for me that in the broader Web3 space, the DeFi side of things is less interesting, and I'm really more looking at anything from the DAO and NFT space, things where the Web3 technology can actually have real world utility as well. So for me, the organizing principle of my investment thinking or decision making process usually centers around the strength and value of the community and what kind of DNA is actually being built from the ground up. So yes, the founder can be really key in all that, but it is actually the ecosystem or the community that is being created that will ultimately be the litmus test for success of that particular project, organization, whatever it might be. That's definitely the first thing for me that's attracting me to particular projects. In terms of the landscape itself, I think what's really interesting right now is we have what might look more like traditional companies or things you might see in the Web2 world, but for a Web3 audience that kind of exists in one space. Then we have hybrids that are sort of mixing the models between a traditional structure and a more Web3 structure, where they may introduce a token to give a level of ownership to their customers. And then of course you've got the full-fledged, whether it's DAO or some other structure that's fully token based, that is more of a contribute and pay to play down the other end of Web3. I feel like the role for venture kind of has like an inverse correlation to that, where there's more requirement for traditional capital or traditional investment in the traditional companies entering into a Web3 market, and much less at the other end, which is where you really want the community to come to the table and to be driving the value, and kind of investment for investment's sake feels like artificial liquidity. There may be cases for and against that at the other end of the spectrum, but I think the fragility of these companies, organizations, projects, whatever you want to call them, without a sustained and sustainable community can actually be quite detrimental. So I'm really trying to observe I guess that dynamic at play as we evolve as well.
Yeah, interesting. Are there any communities that stand out that have been interesting that sort of you look to as a good example in the space, that have been able to build a good community?
I mean, we were talking a little bit at the start just about Crypto Coven, and I think that's an example of an NFT project that has a much broader vision and ambition in a world building sense, somewhere akin to the metaverse. Their plans, regarding tokens and all the rest of it are less clear, but I think it's that the strength of the community and the DNA of that particular ecosystem that has been driving its more sustainable success. We haven't seen the huge kind of peaks and troughs of the price of the NFTs, for example, and the Discord community's health is really noticeable for people entering that project. Another DAO that I'm involved in that I think is doing great things for the governance, compensation structures, and also executing in the real world is Capelin DAO. And I'm really curious to see how those models evolve in particular, especially with the tooling that, as it relates to governance and compensation and the bounty infrastructure and things like that. That's my personal two faves.
Yeah, awesome. Yeah, definitely. It's interesting. It's like communities are a huge part of it, and there are so many experiments happening with these communities where some of them don't even have tokens or don't even have like a set sort of clear message, but it's just like they get so involved in the community, and it's like a secret sauce that it's hard to figure out, and it's so bespoke. How about you? Anyone wants to chime in on the anyone wants to chime in on the sort of interesting projects they've seen that that matches their framework or matches the way they think about these companies and they stand out to them? Sally or Abby, if you want to jump in.
Yeah, I'm always biased and I'm always going to talk about Immutable, but it ticks all the boxes for us and it's a company we're really excited about. I think, for example, you jump in the Discord. Recently, I tried pre-alpha game testing for the protocol, and I was in the Discord. Everyone's trying to help each other in terms of, what's the best strategy to level up your character. They were giving lots of suggestions in terms of this is how you can improve the game, because I think everyone's also really involved in helping the project become successful. So everyone's in this together. They're not going to just play and not give candid feedback. If something's not working, there's a bug. People are happy to report it, and the team are happy to respond to that and take on that feedback. So
yeah, awesome. How about yourself, Abby?
I'll take a different spin on this one and talk about it from like a competition perspective. And so, like earlier in the year, we saw OpenSea sort of be disintermediated in a way by LooksRare. And so that was like an entirely community-led sort of project, and they launched a token, and it's effectively the same product, both NFT marketplaces on the Ethereum blockchain. Not too much differentiation on a UX level, but differentiation in terms of like how does Looksrare sort of engage with its community. So they disperse, a token, the Looks token, to anyone who sort of interacts with the marketplace. OpenSea doesn't, and so from that sort of angle where you can sort of easily disintermediate existing protocols just by building with the community, or sort of providing some benefit to the community every time they use the protocol, is something that Web3 and blockchain tech has sort of enabled. And so it sort of goes back to Lauren's point of like building with the community in mind, or sort of like having them at the forefront and sort of encouraging them or incentivizing them to take action on your product. And so now I think we're starting to see Looksrare sort of eat away at OpenSea's trading volumes on a daily basis. I don't have the up-to-date stats, but I think I read somewhere that a couple of days it sort of overtook in a daily trading volume, if I'm not mistaken. And we'll start to see like more of this stuff sort of happen. I think that's like the unique thing about blockchain tech, is that a lot of products don't have like lock-in on the data side, and so it allows anyone to sort of spin up a protocol fairly easily, and it sort of shows like you either have to win on a distribution level, like engage with your community, do the best by your community, or you just win on like a UX level. You just have the best UX, and usually the products that win have the best of both, the best UX and the best community.
I think that's a great point that Abby raises. I think the real opportunity right now is to actually just improve on some of the basic experience that's been offered in the first wave, and we've seen that with the marketplaces. We're seeing that with wallets as well. And shout out to Josh from Minky, who's in the room doing that in the wallet space as an Australian Web3 startup. There's so much ground to be gained, and such a poor experience on offer, especially when we talk about onboarding people who are less degen than us into the space. There's so much ground to be gained there as well.
Sure. Yeah, for sure. That's like there's so many angles that this sort of decentralization has opened up, and one of that being community. So I guess to talk about the idea of like investors helping along the company, and the decentralization mantra of the space. So community being one, where the community is decentralized and helps. But like for specific projects like infrastructure, investors sometimes set up nodes for smart contracts. Researchers within the investing organization help with the smart contract auditing, smart contract design. So how do you see the landscape of this decentralized mantra, and where the VC can contribute to the journey of the founder? I will leave it open, but anyone who wants to jump in, Sally?
Sure. So I think this one thing that decentralization has really encouraged is active participation by everyone, as I mentioned, and also even more collaboration. So I think we all know, especially the founders, if there are any on the call, it takes a village to build a really successful company. So I think it's in my view, everyone's best interest to get as much help as they can. And that's across, whether you have really active Discord members, if you have angel investors, if you have VCs, if you have blockchain architects, if you have partnerships across, Solana, Ethereum, and every single blockchain. So I don't think in that sense, it should be that, there should be a certain party that shouldn't be in it. I think that VCs can get involved in Web3 if they can prove that they're helpful and that they're helping build the ecosystem or a project. So, I think there's lots of different ways they can help. For example, you mentioned they can help run a node, but, when it comes to, for example, more traditional VC skill sets, things that they can help with, for example, is writing and fleshing out a white paper. I'm doing that right now for one of our portfolio companies. So diving deep, like actually drafting parts of the white paper while building the tokenomics, thinking about, should you have a tokenomics? What does the emission schedule look like? And what's the best way to do it? So there's those aspects I think, VCs can help with. And also there's always the go-to-market strategy. How do you accelerate your growth? Hiring is also always a huge pain point. Like, it's so hard to get a dev these days. And shout out to some of the people who I know here have been really successful in doing that. So I think there's a way to be involved if you can prove that you're helpful.
I think definitely echo Sally's sort of thoughts there. Like, I mean, from like a Folklore perspective, we've got 17 people in our team, half of them operators, half of them investors. And like, traditional startups always face problems early stage, like when they're pre-seed, seed, even when they're Series B, like from a governance perspective or even a strategic perspective. And I think Web3 projects are pretty similar in that aspect, like Sally said, like the talent thing is a huge thing in Web3 when, there's like a real dearth for quality talent. How do you actually go out and seek that in market? And so, VCs can be helpful from that perspective, leveraging their networks, but then also in like a governance or like a tokenomics perspective, VCs have the ability to sort of like, or have the exposure to sort of see different things, as in like different projects, and see it from a different perspective. And as a founder, you're sort of you probably have tunnel vision when you're building, and you're sort of like focused solely on what you're building. And so from the perspective of like pulling you out of that, I think VCs have a pretty important role in helping Web3 projects succeed, but maybe it is more hands-on rather than hands-off, which is what it's traditionally been like with Web2 companies. Is like, some VCs try to get out of the way, or some VCs like overly push. I think there's like a fine balance there for Web2 companies. For Web3, maybe it's more on the pushy or the more proactive side of helping. But yeah, I don't think anyone sort of like figured out how it should sort of work. But I think there are people doing it better than others.
Yeah, that's really interesting. I'll chime in at the end, but keen to hear your perspective, John.
All I was going to say, I think the points have been really well made, but in this landscape, it feels like the power dynamic has shifted, and there's actually a lot more, I guess, power and control on the side of the entrepreneurs building, because there is a lot more people, and the levels of experience that the money has right now is varies from like a lot more experience and exposure, like those on this call, and then those who know they need to invest in Web3 that have no idea why or what's going to come of it. And I think it's really being aware of those kinds of decisions that you're making. There may be lots of people who know they need to invest and don't know why, but are still great players to have at the table, because those may be the ones who are prepared to roll up their sleeves, get in the Discord, be an active community member at the same time as contributing their capital. So I would certainly be kind of evaluating it from that perspective. But I do think the mantra is that, value hits different in Web3, and you really want to know, triaging what level of value you're really expecting from your investors. If you want those active Discord community members, and that's just a proxy for whatever else it might be for the case of your particular business, but you'd be optimizing for that alignment from a values level, maybe even more so than in a Web2 or kind of trad VC realm, where the money can be kind of disconnected from the involvement that a venture capitalist might take. So I think that's hugely exciting, and creates a lot of opportunities for new investors to actually emerge as leaders in this space, given the kind of shifting power dynamics of all that. But also the challenge right now is we're not entirely sure what we're optimizing for, because the endpoints of these models are very unclear and unknown. So that ambiguity will come to a head at some point, and we will start to have more refinement of the processes and the outcomes that people are optimizing for as well.
Yeah, definitely. That's the one thing that I remind everyone in crypto. It's very experimental. I mean, what sounds right today may not sound right 2 years from now, because there's been just external challenges like a regulation, which the teams have to go along with, which sort of shifts that. We started with ICOs where it's like all community investors. Now it's sort of more of a balance. And now you have these research institutions where they invest and sort of help with the technical level. But it's ever changing. And I'm keen to hear some of these tokenomics designs, Sally, of definitely getting wrecked from some of the bad ones. So keen to find out.
I think it's important to remember that we are at the like, can I put my credit card on this website stage of Web3 as well. Like the dynamics of what was concerning in even Web 1, not even Web3, but like all the way back to the beginning. How can we possibly even conceivably put our credit card details on this random website? And we're going through that whole evolution again, where a lot of these problems will be solved and they'll be solved for good, and others will be persistent problems that will kind of give birth to the next wave of innovation as well.
Yeah, for sure. That's like a big one. That's sort of, can you improve the UX without compromising the decentralization, the self-sovereignty, like without giving up your wallet ownership? Can you have like a really smooth UX where it can be assured? I don't know. Yeah, I think hopefully we can strike that balance of good UX, but yeah, it will be a challenge to maintain the decentralization. But I think it will be better. It has to get better for everyone to get involved. Yeah, so I guess one of the aspects with that's like the broad perspective of getting involved with the Web3 projects. But one of the more specific ones that I'm curious about is the sort of decentralized ownership of the company or of the tokens, where there are certain portfolio management principles in Web 2, and they're not as attainable in Web 3 because a certain entity can't own, or even certain entity category can't own too much of a protocol. So how does that play into portfolio management, and how does that work when the tokens are so liquid early on for portfolio management? Could you guys, what are some thoughts around this? Sally?
I think first of all, my main comment is that VCs are certified hodlers. Like for example, it was a 7 to 10 year investment period for our funds. So we know really usually not used to, pump and dumping. It's just not the VC model. We can hold up to, that long if you want to, and you really believe in the company. So I think it's probably actually less of a hurdle for VCs. And also when they invest, there's always some sort of vesting period in terms of, might be a certain year cliff. And after that, actually only a tiny bit gets released every month over a 3-5 year period. So actually, I think provides some sustainability and makes sure there isn't a big movement. But then in terms of how we think about it, I think you always just have to think about what's best for the project and the ecosystem. I think it doesn't make sense to just do a huge dump, for example, and you really need to make sure you are acting responsibly when you do that. But then also as a maybe I'm speaking for a lot of people here, but as especially Aussie VC funds, I think a lot of them are very comfortable having small stakes in businesses, and I don't think that's something that's new or very different.
Can I jump in?
Go for it.
Yeah, I think Sally makes some good points in terms of VCs are certified hodlers. We have 7 to 10 year holding periods, but I'd caveat that by saying good VCs do that. I think there have been instances in the space that either it's the VC sort of pushes for no vesting periods, instant unlock of tokens, that sort of thing, or the team just isn't experienced enough to do that sort of stuff. And so VCs sort of take advantage of it. And I think that gives VCs in general a bad name. And so I think it doesn't make sense to sort of dump your tokens straight away. And if we think about it in the large scheme of things, even just VC as an asset class in general, I think we're looking at longer holding periods. For example, Sequoia just sort of did an evergreen investment vehicle so that they could hold their investments for as long as they wanted, right? And I think that same sort of logic should apply in Web3 as well. And I think good VCs would definitely sort of stick to that mantra. But yeah, it's a huge caveat, and it's probably on the founder to sort of do their DD on the VC before taking their capital and understand the terms of the investment, rather than just sort of taking capital from every single source possible, because there's a lot of money floating around. A lot of it will be helpful money, smart money, that sort of thing. And a lot of people are there just to make a quick buck and move on to the next flip, right? And so it's up to you as the founder to sort of decide and determine which sort of VC you're adding to your cap table. But yeah.
Look, I don't necessarily have anything to add because this is not necessarily the direction that I'm coming from in this space, but I philosophically think about the fact that there will be enduring projects. And I'm only using the word project because it's so hard to define everything as a company at this point. There will be enduring projects that come through this, but there will actually also be projects for a point in time or for a specific purpose. And I think that's going to also create really different dynamics that are unfamiliar to venture. I mean, we could pick Constitution DAO as an example of a very specific point in time, and maybe that wasn't necessarily a venture backable project, but there will be other things that spring up around a particular purpose and use case, and the liquidity horizon is much more specific and short term. And that almost is the unfamiliar part for venture to consider. So I'm just more curious than anything about how these dynamics play out as the space evolves as well.
Yeah, interesting. Yeah, definitely. There is that's a good point about the VC actually has a bit of a bad, like it was the bad actors that were here earlier on, willing to take the risk in 2018 and 19 when no one else was investing. But obviously with their approach, they didn't want to hold on too long. So I think that's right. There's a bit of bad connotation that has lingered around in the community. But that's not going to be the case in the future. I think it's improving, and there's a lot of people, a lot of people coming in, and they're going to be a huge value add to the space to scale it up. To wrap it up before we go to the audience questions, any sort of highlights or sort of points of focus for you in the next year, or sort of a 2022 outlook and maybe beyond that you're tracking, or you're just curious about how they'll play out, or you think they'll be sort of, depending on how they play out, they will determine a lot of future precedences or future examples. So keen to hear your perspectives as you keep up with the space. Lauren, yeah, could you jump in?
Sure. Look, I'm genuinely just curious about year two for a lot of these projects and what actually evolves from that. Something like World of Women, a bunch of the NFT projects that I'm involved in, where they actually get to the point of extending their roadmap, having version 2 of their roadmap. I mean, we've already seen those kinds of things with the other more well-known projects, whether it's CryptoPunks or Bored Apes, but I'm really interested in more of the long tail of what will survive this period, that broader 1%. I tend to agree that most will collapse in some way, shape or form, but there is so much in that 1% that's really interesting to observe. And likewise with the DAO space, where we start to see some of those norms become more widespread, a level of predictability in how these things should get off the ground and exist, and the transformation of NFT projects into more DAO structures that can genuinely achieve the either real world or metaverse world utility that they set out to in the first place. That's my excitement.
Cool. Yeah, Sally, how about you?
There's too many things. I don't even know where to start. But first of all, I think the Ethereum merge is going to be extremely interesting. I'm sure a lot of people here following it closely see how that's going to impact the supply and demand impacts on Ethereum. And also beyond that, how is it going to impact the apps that are building on Ethereum? How it's going to impact layer 2? How quickly can these transactions become? How much lower the cost be? So I mean, that'll be really interesting to see what is it going to truly become a more multi-chain universe, or is Ethereum just going to get stronger and stronger? So that's one thing. I think one that always really interests me is the next phase of NFTs. So right now, as everyone knows, it's very profile picture based, but when the true utility comes on in terms of how can you bring real estate onto it, in terms of that, then how do you fractionalize it, how do you borrow on a NFT house, etc. So I think that's going to be really interesting to see the next stage of NFTs. Also, I guess the identity proof aspect of NFTs as well. I think another space I'm really interested in personally is also bridges. Most of the hacks we've seen, like for example, the Axie Ronin hack, it happens when you have to bridge or tokens across chains, etc. So how can we fix that whole problem of being able to easily move your assets across different blockchains, but also having it be secure. So I think it'd be really interesting to look at the different bridges or other protocols that pop up there.
I think Sally took a lot of the ones that I'm actually excited about, including the merge and the bridges thing. What I'm sort of keen to see is like, what are the other types of defensibility these protocols can actually build in? Like, I think, you know, like I think I spoke about this before, was like on the data side, like none of these protocols have any defensibility because the data is like easily accessible, right? And so there's like a few things out of that. Is like one, there's like indexing solutions that currently exist, and like how they sort of develop in a multi-chain world is something that I'm really interested in, because I mean, all the data is there, but it's more about how you sort of play with it, how you can manage it, how you can sort of process it, that sort of thing is super important. And like infrastructure there, I think is like pretty underserved / like pretty, it's like a uncompetitive market at the moment. And so how that sort of develops will be interesting, because I think, you know, once there's infrastructure there, I think there's like a bunch of other use cases that can sort of pop up. But at the moment, it's too hard to sort of build that without building your own indexing solution or without building your own pricing oracle or whatever it is, right? So there's that. And then also two is sort of like on the merge. A lot of alt layer ones have sort of like popped up over the last you know, couple of years. What happens to the developers on those platforms? So there's a reason why they've all popped up. It's because ETH is like way too expensive to sort of develop on. Do they sort of come back to the Ethereum ecosystem and start developing on layer 2s, or do they stay on their alt layer 1s? And then how does that sort of work from like a dApp layer? Is like, do they continue adding more integrations with different alt layer 1s, or do they sort of like streamline it back when they see volumes on those alt layer 1s sort of like subside, if that is the case? And so I think that will be an interesting trend to sort of monitor and keep an eye on.
Yeah, definitely. Yeah, likewise, I'm keen on all of them. That's why I spent full time on it. But yeah, I agree. I'm really keen to see the NFTs getting integrated into the DAOs. It's almost like the thesis of now with GameFi coming about, gaming doesn't, the gaming activity doesn't reduce in a bear market. So on the same note, NFT and community online activity may not reduce in the bear market. So I'm keen to see how people keep building on these standards, NFT standards, and integrate more experiences. And yeah, obviously ETH2 or layer, yeah, that's the merge and the scaling of L2s. A lot of pressure on it, and I pray every night it happens. That would be huge. So that's but then that flows onto the idea of infrastructure, because I think one thing I realized looking back into history is that the bull cycle is sort of like an dApp, decentralized app cycle, and the bear market is the infrastructure cycle, because the infrastructure now needs to accommodate these new experiments that were tried with the dApps. So yeah, keen to really follow along the standards and the scalability that can come along, which will lead to like a lot of experiments. So yeah, without taking up too much time, let's jump into the audience questions.
Cool. I'm just looking at them over here. So first one is anonymous, so I guess I'll read it out. What are the valuation strategies VC firms use, especially for an early stage project? Good one to start with, I think.
As I said, every project needs a bespoke approach, and early stage projects are definitely the hardest, as everyone can imagine, just because oftentimes that means there is no product or numbers to be looking at. So you're really interested when it's really early stage. The key thing is always strength of the team and the end vision. But in terms of actual valuation methods, you probably can do the traditional things. You look at peers.
Oh, I think so.
Am I frozen?
No. Yeah,
Sorry.
no, you're back there. Keep going.
Where did I leave off? Sorry.
You have to look at like traditional valuations, like looking at your peers and.
Yes, looking at peers. But then, if you really want, I'm not sure the true value. You can try to build a fundamental build up, and sometimes we do think about that. We also do look at, I guess, more intuitive demand supply type models to really try to figure out, how that's going to be built. But I think it's a very difficult question when it's very early stage.
Yeah, I think it's important to understand like why you're raising funds. If you're setting your own valuation, like a lot of the time, early stage valuations are dependent on like the dilution you take on, and so the dilution you take on is like somewhat arbitrary. But what's sort of in your control is more so like how much money you raise. And so as a founder, like you could go two different ways. You could raise a little and sort of bootstrap your way along. But in some cases, that's not a good approach because it hampers your progress, the speed you can move. And so you might want to raise a lot more. And so, like I think valuations early stage, like if we're talking like pre-seed, seed rounds, are literally just like putting in the air, like the seems somewhat right. And it kind of goes back to Sally's point around like having a strong team, having a strong vision, even having a product built out or a really robust white paper there, and that sort of all helps your case in terms of like setting a val. But it's largely like a guessing game, I'd say.
Lauren, is there anything you wanted to add?
Not particularly, other than I think VC has been notoriously challenged by valuing community, and I think that's the real hard thing. Particularly for the projects that I'm interested in. It's not all of the projects that fall under the Web3 banner, but that's the kind of magic number that we do struggle to quantify from a valuation perspective. But I think it needs to be evident for a white paper to be valuable in and of itself. There needs to be some kind of signals that there's that strong groundswell kind of bringing up the rear, and I think that's what's going to drive valuation up at the end of the day as well.
Awesome. Next question. Something I'm quite interested in actually as well. So how can VCs support greater diversity in Web3?
It's a good question.
Yeah, Abby, go for it.
I think before we sort of like dive deep into this one, it's important to remember that diversity isn't just on gender.
Yeah.
It's sort of a lot of other factors, right? It's like your socioeconomic status, where you're from, like what your viewpoints are, your sexuality, that sort of thing, right? So like you have to think about it in a more encompassing perspective rather than just sort of like male, female. And so, I think Web3 does a good job from like an anon perspective that like literally if you're sort of anonymous, no one knows anything about you. And so you're treated on the same sort of level as everyone else. What we sort of need to ensure happens is as people become doxed or identified in the space, I think that sort of same mentality is like, you have to treat everyone equally or equitably is super important. And in some cases, if someone's in like an underrepresented sort of segment, I think that there needs to be programs and things in place to sort of elevate them or give them a leg up. And so, it's just important to think about everyone's sort of like personal experiences and sort of like cater to that, and be equitable more than anything else.
Really well said, Abby. I think you totally covered that on diversity being much more than just gender, and there's so much more to it. I guess I'll take a different angle. I think other ways that VCs can help, obviously besides investing in diverse founders, would be really, I think on the educational and network piece, I think it's really helpful if we can connect, if there's someone who's a first-time founder or someone who's really trying to get into Web3 space for the first time, potential roles that they can go to, point them to really helpful resources, and also putting together some. So if you look at some, for example, the really big US crypto native VCs, they put out really great research and lots of ecosystem maps. So I'd recommend people look at, for example, Lightspeed Ventures has some really good materials. So I think they can do a lot in that piece to make sure everyone's coming from a more level playing ground, because it's such a new space. And I think everyone can admit that there's so much that they don't know. Helping everyone, get that base level understanding is also really important.
Yeah, I think the level of intersectional diversity in the doxed Web3 community is really heartening, and I suspect that it kind of continues through, you know, more of the anonymous community that is out there supporting building these projects. I suspect we will still face a pipeline challenge on the building side, more from a gender perspective, unless we can do some more active work. It's a similar engineering problem. You know, how many women are dabbling in smart contracts now? Probably proportionally less, although I don't know if we have necessarily the data to support that at this stage. It's just a kind of a sense that I get from talking to people in the community. So definitely more work in that direction to make the whole space more accessible, I think will drive intersectional diversity from that perspective. I also think from an investment perspective, the reality is that what makes a successful Web 1.2 traditional startup founder successful, the qualities that we over-index on that has driven a lot of the poor diversity metrics over the last decade or so, those qualities that we're looking for in Web3, I believe, are different. And we will need to retrain some of the kind of investor bias that we might bring to, you know, our investment decisions. I think as I've, you know, obviously my stump speech is around community. I think those skills actually are inherently, you know, different skills to over-index on in this wave, this trend, whereas it was seen as an add-on or a kind of afterthought in the previous waves of technology. So, you know, thinking about how we identify and support and invest in people with those skills, you know, regardless of the diversity metrics, but I think that will actually shift the balance quite substantially. The builders are going to be really important, but there's kind of a twin requirement here for a lot of these projects to be successful. So I hope that continues to drive good outcomes.
Super quick plug, but you know, all diverse members, but especially if there are any young women who are really interested in Web3, please speak to me. I'd be really keen to see, you know, how it might fit in your life, even if it's just getting started with investing or looking at NFTs anyway. I'd love to chat. Let me know.
Awesome. Maybe one last question. I think I might grab one from a doxed question from the Slido. Pavel, do you want to unmute and maybe camera on if you want and ask your question?
Hey, sure. So my question, hey everyone. My question is, what is the primary driver of volatility within Web3 projects? Specifically when you're trying to assess them as a potential investment. You know, we have this saying with my friends where, you know, if you want to get into Web3 projects, assume 100% probability of losing absolutely everything. And so I'm curious to see how you're sort of, what are the key metrics for volatility and how do you benchmark them?
I think first of all, it comes to the stage of the Web3 whole space and the ecosystem. So we're so early on that we are expecting this volatility, and it's not something we're scared of. We're investing in this space for a reason, and we're willing to, you know, take that bet, take on the risk. But I'm not really sure how we, I guess, benchmark them specifically, like each project on. We don't look at it on a this is more volatile than that basis. I think we kind of accept, you know, crypto space is all really volatile, but you might think about, for example, as Abby was saying, like infrastructure projects, you know, I think Dan was saying as well, during a bear market, they tend to potentially, you know, do really well because it's really necessary. But I think volatility, as I said, is something that we all accept and are okay with, and that's why we're in VC.
It's actually a pretty interesting question. And so if you take it back to like a traditional company, all of the startups that we back face periods of volatility. You just can't see them from the outside. Like we see them because we're investors and we get updates frequently, right? And so every company sort of has problems in terms of, you know, like its user acquisition, growth metrics and things like that. But the difference with Web3 is that everything's sort of, you know, tokenized and liquid, and you can sort of see the price chart move from like a minute-to-minute perspective. And so, you know, I think that actually places a lot of pressure on Web3 founders because they're always like benchmarked against that. if the token isn't going up, they're under fire. If the token is going up but not high enough, they're under fire. And so you have to think about it from like the founder's perspective, like how they actually process that. And so ideally, you know, founders aren't sort of like looking at the token price every day. They're sort of heads down in building, and like as investors, you know, like VC works on like a power law dynamic. You expect a lot of your investments to go to zero, and as private investors, I think that's like a reasonable approach to take, but you know, that's not financial advice as well.
Yeah, it is a really interesting question. Thanks, Pavel. And I think, like, you know, public markets are volatile in a really abstracted way as well. And there's also so many external factors that weigh in on the volatility of both public markets and Web3. What I've just been mulling on recently is just how much a lot of these Web3 ecosystems are like starlings, you know, like those birds, that the formations of the birds, they just are like this one organic movement. And it feels like the strength of those ecosystems are what keep them charting the right course. Whereas if you have not bad actors, I mean, some cases there's bad actors and everyone kind of falls off a cliff. In other cases, there's just the fear around the edges, the fun, you know, the fear, uncertainty, and doubt that causes the whole avalanche. I've been in a couple of projects, or observed a couple of projects where, you know, it was evident that the core wouldn't hold, and the smallest kind of movement on the edges of, you know, listings or whatever it might be, where everything falls off a cliff. It's something that I love about Crypto Coven, and so rarely check the price on, for example, just the way they have outlawed any level of discussion of their price in the Discord as a whole. And even where people have tried to kind of corroborate on, I don't know, redheaded witches, you know, clustering together, and except like the gamification of the prices have literally been, you know, very gently stamped out from the culture of the Discord, because I think that fragility of the ecosystem and that connectedness of the whole, whether or not we realize that one person's actions kind of can create that avalanche, is a really fascinating dynamic to all of this, to the volatility that, you know, we are ultimately, you know, it's kind of like climate change. We are so directly connected to each other's actions, and we really need to consider that the whole when we're making those individual decisions as well.
Awesome, thank you.
Cool. I know there are a lot of other questions in the Slido, but we don't really have time for all of them. So feel free to drop them in the crypto channel in the Earlywork community. So I'm sure someone will chime in on the conversation. I know Dan will, Abby probably will, so Lauren will get you in there as well. So yeah, thanks everyone for coming along. Let's do like a final round of plugging, shilling, anything you'd like to share with the community. Lauren, go for it.
Look, not much to plug, except I will give a nod to the fact that Startmate Demo Day is on tomorrow night, and we have 2 Web3 startups in the mix. Josh from Minky was here earlier, and we also have Alicia Geary's startup Provi, which is looking at licensing of artworks, particularly Indigenous artworks. And Alicia is our very first First Nations founder in the Startmate portfolio over a decade. So it's pretty landmark from that perspective as well.
All right, we'll drop a link afterwards. Dan F, go for it.
Yeah, thank you. Just 2 things. Meta collab on Substack if you want to follow the pure degen and endless hours of put into the space to figure, like to collect this information. Follow that if you would like. But also, I guess a shield that I do want to do, but it's not a full shield because it's mainly asking for people to get in contact about mechanical keyboards. If you're in the mechanical keyboard scene, you know the scene. Get in contact. We're working on an NFT project around that where you can customize the NFT as well. So if you're into the scene, get in contact, and I would love to have a chat with you for the community aspect of it.
Cool. Dan, if you want to drop a link in the chat, go for it. Sally, over to you.
No shills from me. As I mentioned, if you just really want to chat to me or King River, just add me on LinkedIn, get my Telegram, Discord, whatever it is. I'm happy to chat.
Lucky last, Abby.
Yeah, a few shills from me. First, feel free to email me at abby@folklore.vc for anything investment related. Feel free to hit me up on LinkedIn or Twitter. Love to speak to any founders or even any operators, like whoever you are, just love talking to people. So please get in touch. On the DAO under side, please follow us on Twitter. So we've got 2 accounts. One's DAO_under, and then another one's called ETH Down Under. And so please follow both of those and stay close to those projects. And then final one is please subscribe to my newsletter, Super Fluid. Yeah, thank you.
Awesome. Yeah, lots to keep track of. We'll drop all the links in the community as well when we share the recording with everyone. So don't worry if you didn't catch all of that. But once again, everyone, thanks for tuning in. Thanks to our lovely panelists for joining us as well. And yeah, we'll call it a night. Catch you all later.
Thanks for having us.
Thanks so much, everyone. Have a great night.
Thank you.
Take care. Bye.
Ciao.